Guys, welcome to FXBITOVENI Forex Algo Decoded. My name is JD. I'm the founder of FXBITOVENI. In this video, I'm gonna teach you advanced market structure trading strategies. This is the risk warning and disclaimer. Make sure you read it carefully by pausing the video. So my question today I want to ask you is, do you really want to master market structure? If your answer is yes, then go back to the basics and we will find that what you ignore is what you need to succeed. And that is the journey of a candlestick. Trust me. That is the journey of a candlestick. That is what you need to succeed. Go back to the basics. Learn how to decode Forex market. And that is the way you can make it. In this video, I'm going to show you how to do that. I'm going to show you a snippet of how you can decode the Forex market using simple method but powerful one. By the end of this video, you will be able to visualize the opening price of the market and do early detection of the low or the high of the price and profit from spread. You will be able to set your target and exit before the market reads to a close price. You will be able to identify institutional intent and stay on the right side of the market, meaning you will be able to follow market makers and stay away from manipulation. You will be able to find optimal zones to anticipate the Wyckoff accumulation, Wyckoff reaccumulation, Wyckoff distribution, and the Wyckoff redistribution patterns. You will be able to find the probable zones for accurate entries and safe stop losses and realistic high risk to reward ratio targets. So guys, make sure you subscribe to this YouTube channel so that you will not miss my future videos. Without wasting our time, let's get started after this intro video. Okay guys, welcome back. We are going to talk about the journey of a candlestick in a bullish momentum. This is something you guys, you ignore. This is something everyone is going to think it's something for beginners. No, it's not. This is an advanced market structure that you are going to study, and it's going to change the way you trade from now on. We have a bullish candle. In our early days, when we started learning Forex, we were taught that a bullish candle will have open price below, right there, and create the low price, of course, there. And that is the law of the candle, right? That is the law of the candlestick, right? And because it is a bullish, it must close above. That is, it will create the high there and it closes there. This is what we were taught, and we know this is the candlestick high, right? We know this is the open price, this level, this is the low, and this is the high, and this is the close price. If this is a monthly candle, this is the open price of our monthly candle. This is the monthly low. This is the monthly high. This is the close price of our monthly candle. If this is a weekly candle, this is gonna be the open price of the week. This is gonna be the low price of the week. this is gonna be the high price of the week, this is gonna be the cross price of the week. If this is a daily candle, this is gonna be the open price of the day, this is gonna be the low price of the day, and this is gonna be the high price of the day, and this is gonna be the daily cross price. That's it. That's it. It's true. We know that. We know that. But there is a question you have to answer yourself. There is a way we must approach Forex. If this is the opening price of the week, for example, how can we detect where we are going to have the weekly low and buy from there and take our profit in these levels? Right? How can we join the movement from the low of the week and capitalize on this movement and take profit on these levels? This is what we are going to cover. This is what we are going to study right now, and I bet it will change the way you approach the market, right? So let me erase this so that we continue, guys. Now you have got the idea of what I want to teach you now, but this is the spread. We talked about the low price and the high price, and this is the spread. This is the body of the candlestick, right? The body of the candlestick is also called the spread, especially when it comes to volume spread analysis. When you add the volume, when you are dealing with Wyckoff, right? We call it spread. We don't say body, we say spread. So what you are expect to do when you want to start using this method in your trading, in bullish momentum, confirm overall bullish bias of the market on a monthly and weekly. That is step number one. This is the rule of the strategy. You guys, you have started running the strategy. I'm teaching you a strategy of how to trade the Forex market, right? Confirm overall bullish bias of the market on a monthly and weekly. That's it. Remember, monthly and the weekly time frame these are the higher time frames that show us the direction of the market, right? If monthly structure is pushing high with high momentum and the weekly structure is pushing high with the high momentum, then our bias is that we are bullish, right? So this is the rule number one. If you have a strategy with no rules, you are doomed to fail, right? You are doomed to fail. You must have rules in front of you to follow. Study structure and confirm whether price is in impulsive phase or correction phase. That is rule number two. What does it mean? I will make sure that you understand this. If monthly and weekly time frames are pushing higher, confirm that you are in impulsive phase or correction phase. So if monthly is pushing higher, for example, something like this, and then weekly structure weekly time frame is creating impulse, correction, impulse, confirm that you are in correction or that you are in impulse. So this is impulse, correction, impulse, correction, impulse, right? Confirm where you are in your higher time frame. Use structure as a compass that shows you where you are on your map, right? So this is rule number one. This is rule number two. You have to keep this in your mind. Look left to identify key levels. There are people out there who don't know how to identify key levels. So you have a price going higher. You have a price going higher and you don't really know your key levels. You don't know your key levels, right? it's something we'll cover in another video, to show you how to identify key levels, because the market will tend to react to those levels, right? So you have to go on, measure the degree of waves. Do you understand, guys? Measure the degree of waves. This is rule number 4. Measure the degree of waves. What does it mean? You have market pushing higher. You have a market pushing higher, right? Look at these waves. These are the waves. These are the waves, but you also have big waves. These are or major waves, if I can say that in a good English. English is not my language. So this is you have a wave here. The degree of waves here. This is the major waves. These are the major waves. The major waves is this one. These are the minor waves. So you have to know where you are. You have to know if you are in minor waves and you are approaching a dynamic support or resistance. You have to know that. I will show you. I will give you an example. So that you will be able to understand this trading method, and it will change the way you approach the market. So let's go on. Now let's talk about the journey of a candlestick in a bearish momentum. When the market is pushing lower, we say that we have a bearish momentum. From the open price, the bearish candle must cross below the open price. You know that when you start learning foreign exchange. We know that this is the open price. It creates the high, and this is the high of our bearish candlestick. And it goes down, it creates the low, and then pushes a bit higher and crosses there. Yeah, that's what we call a cross price, right? So the idea behind this is market within this time frame, whether it is monthly, weekly, or daily, or even H1 or H4 or H8, depending on the time frame. Remember, price is a fractal. You have the open price here, and price goes higher to create the high of this candle, maybe of the week, the day, or the month, depending on the time frame you are looking at. And then price goes down to create the low and then closes. This is the movement, but this it will not always look like this. It may open like this and it falls down, then it goes higher, then it goes down, and then it closes. This is something we go into details, guys, until you will be able to decode the forex market and you start feeding the chart like never before. Now, this is the idea of how the price will be moving when we have a bearish momentum. Our first question is, why does every candle create the high and create the low? Why? It is something we are going to answer, right? Now, the next step will be, how do I know where this candle is going to create the high of the week, for example, if you want to swing, or the high of the day for maybe for day traders, right? That is what we are going to be focusing on. That is what you should be asking yourself when the market opens. When the market opens here, you have to ask yourself, where is the high? Where am I going to expect the high of the day or the week before prices start dropping? This is the low, this is the spread, of course, it's the same. And here is what you are expected to do. Confirm overall bearish bias of the market on a monthly and weekly. I don't care any trading style or trading method you are using, or the type of trader you are. If you are a scalper, a swing trader, or whatever, or a day trader, always confirm monthly and weekly momentum. So in bearish momentum, confirm that monthly and weekly are pushing down, pushing down, pushing down, pushing down, right? Study structure and confirm whether price is in impulse phase or correction phase, right? Look left to identify key levels. Measure the degree of waves. We talked about that, right? These are the main rules you need to have in front of you before you take any action. You have to study instrument you are going to trade and study the whole bias on the monthly and the weekly, and then confirm the structure level, whether you are in impulse phase or correction phase, structure phase. Confirm where the key levels are, whether you are approaching the key levels or whether you are trading higher or lower the key levels. Confirm the degree of waves before you think of taking any trade. Now, let's go on, guys. I want you guys to understand the forex market structure. I want you to succeed. I want you to change the way you trade and go back to the basics. That is the secret. That's the secret of candlestick. Remember, a candlestick is a visual representation of what institutions are doing. It is a visual representation of how market is moving, right? So we are going to take a simple example using a weekly candle. When we talk about a weekly candle, there are people who jump into the market. They don't understand really what is happening. You open a H1 time frame and you start drawing trend lines and you don't know where you are in a higher time frame. That is the biggest mistake that will make you fail big time. So this is a weekly candle, and we already know this is the open price and this is the low of a weekly candle, and it went higher to create the high of the week, and then it went down to create the cross price there. I'm gonna show you how to start approaching foreign exchange. This is, as you can see, these lines I'm drawing here. We have this line shows you the open price. This is the open price. This is the low price, right? This is the low price. And this is the high price. As you can see, this horizontal line here. And this is the cross price. Meaning from the open price to the low price, this is the low of the week. This is the low of the week. From the high price to the cross price, this is the high of the week. And then this is the body of our candle, or the spread. This is the spread or the body of our candlestick. Now, remember, every week in the forex market, every week starts on Monday and ends on Friday. That is our range, right? Our trading days are from Monday to Friday. That's it. You know that. So if you are going to start this candlestick, we will start from Sunday and Monday. We always look left, but mainly when we look at the Sunday and Monday, we want to frame idea of how the market opens and how it is going to behave. That is the idea. That is the idea. So we are going to start from Monday. We assume that this is a Sunday. We are on this Sunday, and this is Monday. This vertical line is our period separator. This is the beginning of the new day. The market opens right here. This is the open price. So this candle opens here. This is the open price of our new weekly candle. I'm gonna show you what you should be expecting when we are in bullish momentum. Remember our 4 rules. You have to know that. You have to have rules. You have to have rules. You have to you have to stop trading blindly and have rules you follow in order to make money in forex. So this is Monday. Market opens and start with a consolidation, as you can see here. Market opens, consolidate, and then it goes lower to create the low of the week. Have you seen, guys? Goes lower to create the low of the week. So this consolidation that happens on Monday happens for a reason. It happens for a reason. Do you get me, guys? For example, if in previous week we have a reversal on Friday, and the market was going down before the market closes, and a new week starts with a consolidation, and then the market breaks. You guys, you are going to sell. You are going to sell this market, especially when you are using a lower time frame structure. You don't know where you are on the monthly and the weekly. You start selling because when you started learning forex, you were taught that whenever you have a rectangle pattern and the price breaks the support level, price breaks the support level, you start selling and your stop loss is gonna be here. You sell the market takes you out, and you are out of the market. This is most of retail traders do. You see a beautiful pattern forming on H1 1 hour time frame, and then because you believe this is a wedge to start going down, you sell, but higher time frame structure is negating this idea. Higher time frame structure is not confirming this movement. So you sell, you go into profit, you are targeting this level. It goes down, they know that you are targeting this level. They don't want you to make a profit. They bring price higher, right? And you are out of the market. But if you start from a high time frame structure and you confirm where you are going, you would never ever sell here. Instead, you will be buying here, taking sharp entries, right? Now, let's go on, guys. I want you to pay attention here. Look at this level and that level, right? Asian session will start with a consolidation, and then it goes down on Monday, for example, and then it creates the low of the week. This should be your entry, and this is where you should be looking for Wyckoff accumulation. Of course, this level, from this level, this will create any form of Wyckoff patterns. If market was pushing higher, this is going to create what we call a reaccumulation. This is a full reaccumulation, but here would be accumulation. We have a reaccumulation on a big picture. As the big picture, we have a reaccumulation, but we have a fractal accumulation here on our time frame, maybe on 1 minute or 5 minute time frame. And you enter here with 5 pips stop loss or 2 pips stop loss, and you are going to target 200 pips of the whole week or 100 pips all the way up here, because our target is to join the movement from here, is to join this movement from here. As price pushing higher, we are still in profit. We keep holding until the end of the week, if we still believe in the momentum, we can keep holding another week as long as we keep believing price will continue to go higher. I hope you have started getting the idea of what we are talking about. Now, this for example will be the end of our first day, the end of Monday. A new day start. When a new day start, it will start with another form of consolidation to perform a kind of manipulation. This is gonna be the low of the day. This is the low of the day. This is another low of the day. Right? For example, this on Monday, if I ask you what type of candle you have here, it might be, for example, a doji or a pin bar, because it has a small body. Right? This is the open. This is the cross. It has a small body, and it's along a week. Right? On a Tuesday, market opens here, and it goes down to create the low of the day, and then it goes higher to create the high of the day. Remember, it will replicate what a weekly candle is doing, because every candlestick must have a low and a high. And this is what is happening on Tuesday. We must have open price, and then the market goes higher to create the high price and crosses. If price crosses here, then this is gonna be the body of our candlestick on Tuesday. If we switch to daily time frame, because if this is H1, we are dealing with H1 time frame. I forgot to add that here. If you switch to daily time frame, you are going to see one candle. If you switch to daily time frame, the whole day will become one candlestick. This open price will push lower to create the low of the daily candle, of the Tuesday candle, the low of the Tuesday candle. It will go down, and then it goes higher, creates the high, and then it crosses. I hope smart traders, students who listen, are getting the idea, right? The idea. I want to make you smart traders, those who are able to follow smart money, those who are able to follow institutions, right? To understand what they are doing and how they manipulate the price. So you get the idea. During Asian session, consolidation start, goes right to create the low of Tuesday. This is your key zone. This is your entry. If you want to add more, or if you didn't catch this move, market will give you opportunity. There is no reason to jump into the market. You have to sit down and wait for the market to come back into your zone. You have to anticipate where the market is gonna trade and wait for it to come back there. That is what we call advanced precision trading. Advanced precision trading. So this is the end of the day. This is the end of Tuesday. The new day will start. Right? Have you seen how market start pushing lower? If you have put a trend line here, this will be a break of your trend line. And if you are a scalper and you want to scalp this movement, maybe in 2 hours or 1 hour or 15 minutes, yes, you may scalp it, but also it may be taken out if you don't know really where this low is gonna form. But I don't advise you to scalp the market this way. Scalp in the direction of the market if you are a scalper. But if you are a day trader, this is your opportunity to buy here during the London session, after Asian session. I really trade the London session. So this will be a consolidation that tends to start at the end of the day. At the end of New York session, the consolidation tends to start during Asian session and the Tokyo session, and then price goes down to create the low of the day. Market is creating candlestick lows. Market opens here, then it consolidates, goes down, and then it goes higher, and then you see they start closing. So this will be your body of the candle, of your Wednesday candlestick. This will be the body of your candlestick. The open price is here. Market goes lower to create the low, and then it goes high to create the high, and then it closes here. This will be the body of your candlestick. And this is the low, and this is the high. I hope that makes sense. I hope that makes it rings a bell, right? I hope it rings a bell in you. Now, the new day will start on the first day, and then market consolidate and creates the low of Thursday, and then on Friday market will return to do what? To make a reversal. On Friday market makes a reversal. I want you to focus on these levels. On Thursday and Friday market tend to make a reversal, or sometimes it may happen on Wednesday. There are many variations, guys. But this time I'm using the simple one to make you understand how the market moves. So the market on Friday tends to create a reversal. This reversal, why does it happen? Because market is coming back into our range to create the high of the week. Right here, we are here. Market is pushing down again to come back into this level right here to create the high of the week, right? So this is why you guys sometimes have trouble trading on Friday. You have to know that on Friday the candlestick, the weekly candle, is trying to create the high of the week, so there must be a reversal, a short time reversal, right? So let's go on. Now, once our candlestick closes here, the new candlestick will start. The new candlestick will start. The new weekly candle will open here. Our new weekly candle opens here. After the open of our new weekly candle, remember it must also create the low, right? For example, if you have an filled level, if you have imbalance here, this weekly candle will tend to go down to fill that imbalance, and then it goes higher. Expect another reaccumulation happening here. A reaccumulation, a Wyckoff reaccumulation is going to happen in this zone, right? It's going to happen in this zone, and you have to be smart and anticipate where it is going to hit and enter at the end when a reaccumulation is going to be over, or at the spring of that reaccumulation, right? So if I say spring, if you don't know Wyckoff, I know it's somehow challenging, but understand this concept the way I'm trying to show you this concept, and focus on that. Wyckoff is another thing. If you want to study more advanced structures, maybe you will talk to me and we can see if you can schedule a session for you, a Zoom session for you, or a mentorship class for you. Now, the new week will start and then tries to go lower. Then, on a lower time frame, price will be pushing down, right? Pushing down. Remember, you have broken our trend line, because the retail traders will start thinking it's time to sell this market all the way down here. You enter here, you target this level, thinking it's going to go down because you believe this may be a flag or whatever, or a break of this channel, go down, only to find that market is going to push higher again. This is a reaccumulation that will happen here. And knowing this, you do not have to buy here. No, you are supposed to be buying here when the others are selling this level, right? I hope this makes sense and is changing the way you look at the market. I will give you an example in area chart. I will give you example in bullish momentum, and you go back you yourself to perform the same exercise on a bullish, on a bearish momentum, just to make sure you understand. So market will go down to create the low of the week right here. As you can see, this horizontal line here goes down to create the low of the week. You may ask yourself, how do I know market is going to stop here and start going higher? There are different codes of the market you need to master. There are many codes of the market you need to master. You cannot start trading this strategy alone. There are a lot of stuff you need to master, and then start scanning the market like a pro. Now, price pushing down here into this level, and then it must go higher. This is the lower time frame structure, maybe 15-minute time frame or 1 hour time frame, but weekly and the monthly structure is giving us a direction of where we are heading to. Market will push down and then start going higher. You see that level? Maybe that will happen on a Monday or Tuesday or Wednesday for weekly reversal. It depends on the type of the market. There are so many variations. Maybe we'll talk about some of them as we continue growing this YouTube channel. You guys, you have to subscribe to this channel and like this video if you love this type of trading, if you love this type of teaching, this teaching style. If you like this strategy, make sure you like this video. Make sure you share to your friend in order to keep them awake. So let's talk about a daily candlestick. Remember, this is a weekly candle, and each day you will have one daily candle. And this we are in details here because we are using H1 or M15. But if we go to daily time frame, you are going to find one candle here, another candle here, another candlestick here pushing higher, another candle pushing higher, another bearish candle here going down, right? So we are going to deal with one candle here, one candlestick here. So this is why we have a daily candlestick here. If you switch to a bar chart, you know, in your MetaTrader or your trading view, you have we have a candlestick chart, you have a bar chart, and you have a line chart. This is a line chart, this is a bar chart. This is open price, of course, of our daily candlestick. This is the open price of our bar chart right here. This is the open price of our line chart right here. So in this level, how do we deal with one daily candlestick? How do we deal with it? This is the open price of our daily candle. Inside a bullish weekly candle, we have our open price of our daily candlestick. Now, the daily candlestick will start consolidating. Most of the time they start consolidating. Most of the time they don't. They don't, right? I'm showing you ideal setup. I'm showing you optimal setups that you should be looking for. Start consolidating during Asian session, and when the London session kicks in, you know what happens? Market start going down. What they are doing from here, this consolidation is is building liquidity. They are making you believe this is a support level. support level, this is a resistance level. When they start going down, they are doing what? They are taking your stop losses here. They are coming back to hit a certain level here. Maybe we have more weeks here. People who added some buys here. Stop losses are here. They want to grab that stop losses, those stop losses, and then move the market. And this tends to happen during the London session. This is why you see these boxes: London session, Asian session, and Tokyo session here. And this is the London session. Market goes higher, and when New York session kicks in, market tends to create a short time pullback here, and then market start pushing higher again. And before the end of the day, market must come back to the range, must return back to the range before it enters another Asian and Tokyo sessions. Why does it go back here? Because every candlestick must create the high. Every bullish candle must create the high. Have you seen? Our job is to find our entries here, and here, depending on where the market is coming from. If the market was pushing higher, this is going to be a Wyckoff reaccumulation here on this level. This is going to be a Wyckoff reaccumulation here, and this is going to be a fractal accumulation on a lower time frame. Guys, if you get this idea, I bet you are going to start making money. This is going to be a reaccumulation on a big picture, but this is a big schematic, that a big Wyckoff reaccumulation schematic. But during this spring, we are going to have a fractal Wyckoff accumulation on a lower time frame. That is what we call a schematic inside a schematic. Excuse me. A schematic inside a schematic. To get the idea. And you have to know exactly, you have to plan ahead before it happens. You have to know. I don't mean that you have to predict the market, but you must have high probable zone where the market is going to hit and then start flying, and that is your buy zone, that is your carry zone. So you are not going to be trading like this, because the market goes down, you start to sell, you are taken out. No, market goes down and you start smiling because market is coming back into your carry zone. You have already marked here, and then create a fractal accumulation here as your confirmation. You hit the button, 5 pips stop loss, 2 pips stop loss, and you are targeting what? Maybe 100 pips or 50 pips, right? And it's gonna you are going to get 1 to 10, 1 to 5 risk reward ratio. I hope you get the idea. Now, this is what I want to tell you about a daily movement of a candlestick. We are talking about a bullish momentum. Now, daily candlestick in 15-minute time frame. If you didn't understand what I mean here and here, let's go into details and I show you more. I want you guys to understand how the market moves. So daily candlestick in a 15-minute time frame or lower, right? So this was our Asian session right here. This was our Asian session. This is our Asian session all the way here, and it ends here, and the random session start here. But this level, as you can see, this red level, this pink, is it pink? Yeah, somehow, if I can call that, if it is a pink level or purple level, I don't know, purple color. So this level is what we call reaccumulation. Market was pushing from here, and they start consolidating, for example, and then goes down and then it goes higher. This is what we call reaccumulation level. If you want to succeed in Wyckoff, let me talk to those people who already trade Wyckoff. If you want to succeed, you have to know the structure of the market on a higher time frame. That is when you are going to succeed in identifying Wyckoff distribution and reaccumulation, because they tend to behave the same. Price may be here and you start to think this is going to be a distribution. But because higher time frame structure is showing you the direction, expect that this schematic will end up being accumulation, reaccumulation, right? So of course, when you deal with Wyckoff, you have to add the volume. I don't mean structure alone. So what I mean here, this is a big picture of our reaccumulation. This is a big schematic of our reaccumulation. But during the London session, market will tend to create another lower time frame accumulation alone. If you start from here, this is going to be a beautiful accumulation, and then you enter here, your stop loss all the way down here, and then you let the market play its own game. So this is New York session kicks in. Market may repeat the same or not, but I love trading a London session alone, and then market will start pushing higher. That's it. I hope you are getting the idea, guys. I hope you are getting the idea of how to trade foreign exchange. Now, let's talk about the journey of a candlestick in a bearish momentum. We know price, the candlestick will be pushing down, and we know exactly that this is the open price, this is the high price, this gonna be the low price, this is gonna be the close price. That is how the bearish candlestick is gonna move. In order to deal with this, you must have higher time frame structure bias in your hand. You must have the whole bias. I will give you an example, guys. Don't worry. So this will be the high. This will be the open price. Below, we will have the low. I hope you are seeing these horizontal lines here. These horizontal lines that are appearing. This is the close price of our bearish weekly candle. The process will be the same on Monday. There may be a consolidation, and then the market goes higher, right here, to perform a form of manipulation, and your focus is gonna be here on this level and that level during a London session, and that may be the end of the day, maybe, or price may continue to drop all the way down and then come back to this level later. Don't be rigid. Don't be rigid. Try to be flexible. Try to adapt to changes. That is what you should be expecting. And then price another day, Tuesday, Asian session, manipulation there, price drops. Wednesday, consolidation, light there, and manipulation there, and then you join the movement and the price continue to drop. This is a simple example. It doesn't mean it will happen like this every day, right? I I always like to teach people who are flexible in understanding, who adapt themselves to the changes. So on first day, market will consolidate, of course, do the same thing, and you can see it was moving inside the channel. And on a Thursday and Friday, we are going to have a form of reversal back to the range, and then it leads to a cross price, a cross of the week. Right here, the week crosses here, and then a new week start. Right? So once a new week start, right here, this is the open of the new candle. We expect another high of the week, and then it goes down as price continue pushing down. Now, you see the high of the new week right here. There's a projection to show you how everything moves. Market goes higher to create the high of the week there, and then market start falling down. Right? A big consolidation, a big weekly consolidation, and then that leads to Monday consolidation, and then market goes higher and then start falling down. And we are doing this confidently because we know exactly where price is going, and we know what market is seeking. We know the kill zone before it happens. We know what this candlestick wicks are seeking. They don't go there for no reason, to seek nothing. They go there to find something there. So let's continue, guys. I hope this is making sense, and you are changing your mindset about the trend lines. This is a trend line, of course, price respecting a trend line, but you see price has broken the trend line here. And if you start buying, for example, this is a rectangle, price breaks, come to test, goes higher, you start buying thinking we are going to go higher, and you are out of the market. Why? Because you don't know where you are on a higher time frame. Right? That's it. Let's continue. I want to change you. I want to change the way you approach the market. I bet you never find someone teaching you this. Yeah, they are, but they will charge you money. they are. So, they will charge you money. I know. Let's go on and talk about the daily candlestick in a bearish momentum. Of course, this is the open price of our daily candle, our daily candlestick. This is the open price of the bar chart, right? Goes higher, goes down, and then crosses here. And this is our rainy chart, consolidating during Asian session. The London session kicks in, and market goes higher, create a reversal. There are lots of stuff to look at here, guys. Lots of stuff I can teach you to confirm, and then the market start dropping down, and a New York session from here, New York session, and then leads to another reversal that leads to another Asian session, right? Another reversal here that leads to another Asian session here. That's it. Now we have to continue, guys. This is a details. This is when you are going to lower time frame structure. If you are using 50 pip stop loss, 20 pip stop loss, guys, you may use lower time frame structure and decrease your risk, right? Sometimes decrease your risk is another way of increasing the risk if you use a tight stop loss. But when you know what you are doing, you can decrease the number of pips you are going to use here, right? If your stop loss is supposed to be here, you may end up putting your stop loss here or here. As long as price is showing you that it's dropping, you start selling. Stop loss here because you know exactly where you are. You know what you are doing. Remember, price is a fractal. What you see on a higher time frame structure, you can also see it on lower time frame structure, right? So depending on the where the market is coming from, if market was coming from here, and this was a Friday reversal that leads to a new day starting on Monday, this level is going to be a Wyckoff redistribution. Most of the time it's going to be a Wyckoff redistribution, and to create this type of schematic, right? Goes higher and then it drops. A Wyckoff redistribution, and inside the Wyckoff redistribution you will tend to find another lower time frame distribution in a random session. If you use lower time frame like 5 minute time frame, or 1 minute time frame, or 15 seconds time frame. That's it. I'm just giving you the idea of what to look for. Now, market will continue to drop. Of course, you capitalize on this movement. Market start going down, and the New York session will bring back price to the range at the end of the New York session, and the new day will start. And this is market will be creating the low of the day here, and this is gonna be, if the market opens here, this is gonna be the high of the day. I hope this is very clear to you guys. Now guys, let's go back to the chart, guys, and I'm gonna show you how you should be approaching forex market, how you should be trading forex market, and I hope this is gonna be very insane. This is going to change the way you trade, guys. Remember, we are talking about the advanced market structure trading strategies. This is FXBITOVENI. Did you like the video? Did you subscribe to the channel? Are you going to share this video, guys? Are you going to join our Telegram channel? Yeah, welcome. So let's talk about this structure. This is AUD USD monthly structure. Here is the problem people are facing. You see price is dropping down here. Am I selling? Am I buying? What should I look for? What I focus on is the current swing. The current swing, right? The current movement I see, market is pushing higher. That's it, period. Market is pushing higher. Let me give you here, market was pushing down. For example, if we are here, of course we have broken this structure, we are supposed to come back to this level. But do you know that market will come back there? Look at the movement. Look at the movement. Almost from 2013 to 2015, it was a hold down trend. If market break this structure and wait for it to come back to this level, you are not going to make it. Maybe this, because this pullback is over. This is a pullback. The pullback is over. This was a push. This was a pullback. It was at a certain level. It's time for another impulse. Market pushing lower. This is another pullback. When market started pushing lower, I'm ready again to join this trend, right? Pullback, market start pushing lower here, and then break the structure, which shows me a reversal, a short time reversal, and then market start dropping down, confirming that this is going to be a retracement, right? And then market start pushing down again. This is the time to use my strategy to kill forex market, this downward movement all the way down here. Then market start pushing higher, beautiful trend, breaking the structure, key levels, returning back, and then it goes higher. This is a beautiful trend. This is money. You should be looking for money here. Now, market is rejecting this level. Institutional candle here. Market, we don't know what is going to happen, guys. Maybe you are going to have another pullback and then it push higher, or we are going to break the structure and continue this momentum, this bearish momentum, because price was breaking the structurals here. Maybe it's going to go back and break another structure. We don't know. What we focus on is what is happening. My job is not to predict that the market is going to go there, because it may do whatever. Right? Market may go wherever. Who knows? No one. It's all about believing. So we are in this institutional candle, in this zone. We may be pushing down. If we break this structure, maybe come back to test something, then we may go down. But that is what I want to clear some doubts, and I want to show you what to focus on, because you are not going to be a positional trader. You are going to follow the market where it goes, and the market structure will never lie. It will tell you. Yeah, right now I have an idea of where monthly chart is likely to go. I have an idea, but it's not what I'm going to show you. I have an idea, but it is an assumption. I'm assuming that where market is going, but I'm not the one who moves the market. Right? So what I'm focusing on is what the market is gonna do. If this is gonna be a retracement, that's fine. If it shows me reversal here, then I will start smiling again, and I will have more confirmation from a fundamental, for example, to confirm where the market is really going, and then I start riding the trend. That's it. Now we have a USD monthly. Our focus is here. It's not this downward movement, it's this upward movement. At this time, AUD is dominating USD. We are in a bullish trend. AUD is very strong. Now we will be looking at here. This is impulse. This is a correction. This is another impulse. Right? Have you seen, guys? Impulse, correction, impulse. I repeat one more time. Impulse, correction, impulse. So if you are trading, you have to trade monthly and the weekly impulse. Right? This push to the upside. So this is your time to get your lion share. And don't join this movement unless you know what you are doing. You can sell all the way down here if you know what you are doing. But if you don't know, I advise you to look at pairs that are trading in this impulse. If you want to catch this retracement, you will need more skills, and you will need to talk to me maybe. So you have got the idea now of what we are looking for here. We are looking for this. Now let's switch to weekly structure. Remember, this is the monthly. You see, I have two pictures. I have two screenshots. This is one screenshot, number 1. This is number 2. This is the weekly structure. This is the monthly structure. Monthly time frame, weekly time frame. I hope you get the idea. Now on a monthly, we are here pushing higher, retracement, pushing higher. On a weekly, we are here pushing higher, retracement, pushing higher. Now you have the whole direction. You know where the market is really going. Avoid any other second guessing. Market is pushing higher, period. As you can see, market is pushing higher. Do you see? Monthly and weekly, market is pushing higher. Have you seen? Market is pushing higher on a monthly and weekly. And then market start retracing on a monthly and weekly. Right there. Do you see? On both sides, Market is pushing down both on the weekly and the monthly. Any reversal you're going to find here, do you see this engulfing candle? But you have to detect the reversal before it even happens. If you are smart, you know exactly that the market is going to reverse. You must already in a trade here. You must already be in a trade. So market is retracing there, and then it is pushing higher again. Have you seen? Pushing higher on the monthly and the weekly. Now we have the direction. Do you see our focus there? Pushing higher on both sides, monthly and the weekly, pushing higher. So this is impulse movement. How do we write it? Impulse. Okay, I don't know. I think it's this way, impulse. Then this is a retracement. When I'm not typing in my keyboard, sometimes it's not easy to write some words. This is a retracement, and this is another impulse. I hope you like this type of handwriting. Now, so this is impulse, correction, impulse, right? Now you have to focus on the impulse, the trend. Have you seen? This is our movement, guys. This is where we are going to focus on, this level and this level. This we are going to focus on, because now we have the direction of the market. The correction is over. We have the direction of we already have the direction, but we have the direction of the market on the monthly and the weekly, and the correction is over. We are in the impulse phase, and now it's time to find our opportunities to buy, because we know really where the market is going. Any buy that we do here is going to be a high. Is going to be high probable, right? It's going to be a high. We are going to generate a higher probability trading setups here, right? So our focus is going to be on this level, in this zone. We are going to find our entries. Remember, this is weekly time frame. We have the whole bias of the market. This is our weekly time frame. We have the whole bias of the market. Now we are going to zoom in here. We are going to ignore monthly. We are going to zoom in here, this level, and I'm going to show you how we should be approaching the market. Now let's zoom in there, and I'm going to show you what to focus on, right? Now this was our correction. This is the impulse going higher, and we are going to focus on this level. As I told you, this is our weekly time frame, meaning every candlestick we have here is going to take a whole week to complete. This takes a whole week. Lots of pips here, from here up to here, lots of pips. From here up to here, lots of pips. This is every candlestick you see here takes a whole week to complete. So our exercise is to remember the basics of candlesticks. The basics of candlesticks, whether they are bearish or bullish. So this time we are going to deal with a bullish candle. This is the open price. This is the low. Goes higher to create the high. Goes down and then it crosses. The journey of candlestick. We are dealing with the journey of candlestick. If you master this strategy, if you try to understand how the candlestick is moving, what you need is one. You need to talk to me for a refinement, to refine the strategy, to show you like advanced patterns to look for and detect where the low is going to be. Teaching you how to identify manipulation, teaching you how to identify where the low is going to be and capitalize on the movement before it happens and trade like a smart, trading like a pro, right? Now, our job is, or our task is, to enter on the low of the week. The market is trending higher. We want to kill the market from the low. We want to enter here. We want to generate our entries here. Our entries here, right? Our entries here. Market reverse on us, right? Now, we have maybe performed here a break even, and now we are done for the week. We have had winning trade. Maybe we lose one trade or two trades here, and we are very successful. You will not win all trades. And sometimes market will give you a signal, especially if you have a volume below, that this is going to be a short time retracement. And if I teach you all the patterns you should be looking for, you will even know this, that it's going to happen, and you will know that it's going to hit certain levels here. I am a proof that you can kill Forex market. Now, our job is to find our entries here, guys. So, every candlestick here takes 1 week to complete. Always remember this schematic. In every time you are looking for bullish momentum and bearish momentum, you remember the candlestick will close below for a bearish candle. Our job is to study every candle here. This is the low price, this is the open price, this is the low price, this is the high price, this is the close price, as you can see here. You can choose another candle. For example, if you want, this is the open price, this is the low price, this is the high price, this is the close price. This is what we are going to play. This is the game we are going to play, right? And I hope you are liking this style of trading. Remember to subscribe to this YouTube channel. You are going to find amazing strategies you never thought exist. You are going to like this YouTube channel. You are going to like my mentorship program. I promise you. It will change the way you trade foreign exchange. Now, we know what we are going to focus on. Now, what are we going to do? Here is what we are going to do right now. Put a vertical line in the middle of each candle. This is the candlestick. Put a vertical line in the middle of each candle. Here, a vertical line, a vertical line, a vertical line, a vertical line. For example, here, if a new day starts, put a vertical line at the opening of the new day, of the new weekly candle. Put a vertical line there. Most of the time, it tends to be here because the opening price is the middle of this candle, right? Now, what you will be doing is this: put a vertical line here, another vertical line here, another vertical line here, another vertical line here, another one here, another one here, another one here. I'm taking this beautiful bullish candle to give you an idea, right? Then switch to H4 time frame. Switch to H4 time frame structure, time frame to see a structure. Why do we do that? We want to see details because we will have to analyze the market until we enter on 1 minute time frame or 5 minute time frame. So price is breaking the structure, pull back, break of structure, pull back, break of structure, pull back, break of structure, right here, pull back, break of structure. So you want to see this higher highs, higher lows, highs, higher lows in a lower time frame structure. Now, this is why we have to switch from weekly to H4 time frame. We are going to have this. We are here. We have put the vertical lines here. If you switch to H4 time frame, you are going to see this. Right? So this is the same as period separators. Maybe you have to adjust the lines, but this is the period separators. So the new week starts from this level and ends here. Another week starts here and ends here. Another week starts here and ends here. Another week opens below and then closes here. Of course, this one also starts from here. Have you seen? We know the opening of our weekly candle is here. This is the opening of our weekly candle. This is the opening of our weekly candle. This is the opening of our weekly candle. Right? This is the opening of our weekly candle. This is the opening of weekly candle. You remember how the candlestick opens? You remember. It's the same. The problem, sorry, the modification is we have changed from weekly to H4 to see details, but we know the open price. Right? I hope you are getting the idea. Now, this is the open price, for example, and then this is the low of the week. Your job now is to find entry on the low of the week. And how do you know that the week is going to form here? You have to look left. There are lots of things you have to consider before you hit the button. Right? Before you hit the button. There are lots of stuff to consider. Another week start. There, that is the low of the week. You are going to find your entry there. Another week start. This is the low of the week. You are going to find the entry there. We are dealing with the candlestick, guys. So if I ask you to draw the weekly candle, for example, here, this is the close price. Remember, the body of the candlestick is between the open price and the close price. So you can put a horizontal line here and another horizontal line here. And this is your body of your weekly candle. And this is going to be the low, meaning the candlestick will look like this. This is the low of the week. And the high is here. This is going to be the high of our candlestick. Have you seen? So we are making sure we enter at the low of our weekly candle and take profit when the market is going to close. Or keep holding if we think price will continue to go higher. So, from this level all the way here, we have 5 days. These days also will continue to create the same thing. You remember when I was showing you how to deal with a daily candle structure. That is why I gave you that structure, how to deal with Asian session on a daily candlestick. I wanted you to have that idea. So when I say we have 5 days here, if you switch to H1, you are going to have 5 days here, and you will start seeing a crazy structure, crazy entries. You know where you are doing what you know. Right? I hope this strategy is changing. It's changing the way you look at the market. Now, this is the open of the new week. Price creates the low of the week and then it pushes higher. Right? Another one opens, creates the low of the week right there. Have you seen? Opens there, then creates the low of the week. Another one opens there, creates the low of the week. Have you seen? This is what we are going to be looking for We know where the market is going in a higher time frame. We are not afraid. We know what to focus on. We know that this week will form here before it happens. If I teach you my whole strategy, you will know that this row is gonna go there before it happens. You will have that mindset. You will start anticipating that. You will start anticipating that the low will form below here if you know what you are looking for. And that's something I can teach you. If you give me 4 days of mentorship to teach you, I can teach you the way you trade the foreign exchange, period. And you focus on your psychology. Now, this is what we should be focusing on. These are our entry zone in these cycles. These are our entry zone. Every zone will have a form of fractal structure of Wyckoff schematic accumulation, period. Do you get the idea, guys? Every zone will have a form of fractal structure of Wyckoff schematic accumulation. This is something you should expect. These lows, this zone here, there is a Wyckoff accumulation here, taking entries, and everyone is gonna ask, how did you do this? There is a Wyckoff accumulation here. But it is a fractal accumulation. You remember this. It is a fractal structure of Wyckoff accumulation on lower time frame structure. On lower time frame structure. 5-minute time frame, 1-minute time frame, 15 seconds. You are doing what you know where you are. But this accumulation is happening inside the reaccumulation. You may wonder, where is the reaccumulation? Let me show you. This push, this consolidation alone, this level of consolidation is Wyckoff accumulation, right? This is a form of Wyckoff reaccumulation, right? This consolidation is a form of Wyckoff reaccumulation. Do you want to show me the buy climax, automatic rally test, test of spring, we go higher? Those who trade the Wyckoff will understand better. Will understand better. Please subscribe to this channel, like this video, share this video. I want this video to trend to be the best video ever made on YouTube, to help you guys study structure, to help you guys trade the foreign exchange. Now, we have an idea. What if we wanted to focus on this level? What if we want to focus on this level? For example, how can we take an entry here? Right? It is something we are going to cover. Now we are inside our MetaTrader. Now we are inside our MetaTrader 4. We are inside our MetaTrader 4. Now, if you look at this level, as I told you, what if we want to start this movement? This is a down trend. You have to study structure here to find your entry point. If you switch to 15 time frame and you study that level, you are going to find a beautiful accumulation here from those who know what they are doing. You study structure here, pushing higher highs, higher lows, BOS, break of structure, returning back to our level of interest, our point of interest here, then market break the structure again, another day kicks in. If you activate the period separator, this is the Monday, the low of the week on Monday, break of structure to Wednesday. We are ready now, still ranging a bit, but forming, accumulating orders, and then price goes higher. Asian session kicks in. Asian session, London session kicks in. You see this indicator. London session, New York session kicks in. A reversal here after hitting the level of interest here. If I go to details, you guys, I can show you everything here if you want. If we go into details, I may show you this candlestick wicks. This week you have here why it is the level of interest. What time structure will tell you. You see what I've been teaching you, manipulation zones, boom, go down, pushing higher, and that's it. Price continue to go higher, price ranging, boom, goes higher. This is what you should be looking for in foreign exchange. I can teach you this and start approaching foreign exchange like never ever before, right? This is what you should be looking for. You know exactly your buy zones, and you are going to find fractal accumulation here, a form of accumulation in every zone. This is a form of accumulation, guys. Do you know how we call this? There are several codes of the market you guys should master. Then another day start a beautiful Wyckoff accumulation, market start making another rally, right? Have you seen pushing higher? Boom, during New York London session, market goes down. I know how you can. I will teach you how to select the right zone here, and you start trading, right? Have you seen accumulation? Market start trending higher. That's it, you guys. This is what you should be looking for in foreign exchange. Did you like this video, guys? Have you got the idea? Are you capable of identifying the right zone and start trading on your way to the profit you desire? Are you capable of identifying these zones? Are you capable of identifying where the market will really hit on this level before it goes higher, right to the pip? Have you seen? Before it makes a rally, you should know that before it happens. Have you seen? Asian session, market goes down, boom, we start pushing higher, pushing higher, pushing higher, pushing higher. There are different codes of the market you need to understand before you think of trading, guys. Trading is not about drawing trend lines. Trading is not about putting your horizontal lines or some form of trend lines here, and you believe market will obey your lines. Market doesn't know your line. Market doesn't know your trend line, right? If they know, institutions, okay, they know that they manipulate that. They do that for a reason. If I can say that way, because trend lines are manipulated. Trend lines are manipulated, guys. So that's it, guys. That's it. Now you may have more questions, I know. You may have more questions. But if you focus on these levels, I didn't want to go into details, guys, because I want to show you how to scan the market and trade, follow the trend very smart without much ado, right? So understand that every zone will have a form of fractal structure of Wyckoff schematic accumulation. I didn't want you to teach Wyckoff right now. That was not part of this video. I didn't want to teach you how to make entries. What I want to teach you is to show you the zones, how to scan the market and know the right zone and what you should be expecting. But still, you will be taken out if you don't know how to deal with these weekly lows and how to anticipate where the low is going to hit, right? So you have to frame the idea before things happen, right? So what you are learning, it's a snippet. It's a snippet of the whole idea, of the whole strategy that we use. So you have to learn to adapt to changes, because what you see may change. I may say the law of the week reform on Monday, it forms on Tuesday. Yeah, you have to adapt to changes. So what if market forms the law of the week on Tuesday or any other day other than Monday? That is the question you may ask yourself. Why? What if market forms the law of the week on Tuesday or any other day other than Monday? What if market opens and keeps making a steady momentum each day till Friday? That sometimes happens. What can you do if market opens and keeps making a rally even during Asian session, keeps trending? What can you do? What if market opens and keeps ranging the whole week? What can you do, guys? What if I see manipulation like structure in the Asian session? For example, there are sometimes you will find a structure that looks like a manipulation in the Asian session. What can you do? There is always a solution for that. There is always a solution. There is always a solution for that. And it's something you have to keep in your mind. You are probably tired of taking trades that go against you. You are probably tired of indicators, trend lines, and chart patterns that give you false signals. You are tired of losing control due to the lack of market direction. You are tired of lacking market timing and jumping to trade prematurely. You really need a deep understanding of how institutions move the market. You really need to master a complex structure of the market. For example, I didn't go into understanding structure because structure is not about the high highs and high lows alone. It's about understanding complex structure. You really need a good psychology and risk management skills. That's what you need. That's what you need to make it in this industry. It's not about the drawing trend lines. It's not about drawing patterns. It's about understanding why this is happening. It's about understanding why instead of trading a head and shoulder pattern, you have to ask yourself, why does this head and shoulder happens in Forex? And you will know exactly what to do. Do you get the point, guys? I don't know where you are. But I hope you are enjoying this video. If you share this video, I'm gonna create another crazy strategy that will change the way you trade. So connect with me. I will change you. This is my Instagram username, JD Wanyu. This is my Instagram username. My Telegram, JD Wanyu. My website, www.bitoveni.com. If you go there, there is no content there unless you are going to pay for mentorship. That is what you can find there. Payment options. We are supporting Bitcoin payment only because that is the fastest way, the most secure way, right? So if you need a serious mentorship or want to join my Telegram channel, check links below in the video description. You will find the links there, including my WhatsApp link or my Telegram channel link, a link to mentorship payment page, or a link to my Instagram. All these usernames are there. You can go there and click whatever you want. So you guys, make sure you subscribe to this channel. Make sure you like the video. Make sure you share the video to your friends. And you guys, if you show me interest in understanding more advanced structure, I'm going to create another video for you. crazy video that will change the way you approach the market, that will change the way you trade foreign exchange, right? This strategy will work better in forex market and indices and some cryptocurrencies, guys. If you go to Nasdaq, you will love this method on Nasdaq. If you have a problem trading in Nasdaq, guys, I will create a video about Nasdaq. If you have a problem trading in Nasdaq and US 30, I will create a video for that using this method to show you what to look for, right? Because Nasdaq and the US 30 are totally different in a way. You should be trading those stock indices. Guys, did you like this video? Comment below. Leave your comment in the comment section. Type something. Tell me, JD, today I have learned this. You have taught me this. Share your idea. Tell me your feelings. Please motivate me to create another video. Give me another reason to create another video. And the reason I need is your interest in this. This is the first video on this YouTube channel. I'm going to drop another one maybe this week, and I'm creating another one for people who are new to Forex, those who don't know pips, those who don't what and what. I'm creating a video for you guys, and I hope you will enjoy that video. Subscribe to this channel, like the video, share, follow me on my Instagram, text me on my Telegram, follow my Telegram channel, and we are going to make it. We are going to take it to another level. Thank you very much. May God bless each and every trader, and may God bless Africa. Thank you very much.